All right, thanks very much for that. Let's shift focus and talk about how India is likely to see the emergence of several new opportunities over the next few months, even on the listed side. Representation from technology backed consumer tech companies, ed tech companies, insure tech companies would be taking place. Someone who has really looked and analyzed this space very closely in terms of business models, the valuations, and what opportunities actually which lie ahead. Venugopal Garre is joining us now from Bernstein. Venu, thank you so much for your time. Good afternoon. Just yesterday, Policy Bazaar, which is also one IPO bound company from the list of companies you had looked at, was on the channel and was talking about good growth coming in. In fact, in the last few months, even in the pandemic, they saw growth. How have you analyzed this entire window which is opening up now in terms of the kind of business models which are up for offer?
So you're right. I mean, this is a fairly interesting phase in terms of a lot of these, I would say, consumer tech companies coming into a situation where they would probably be tapping the IPO market. Now, it's not that these are new companies. Quite a few of them probably are more than a decade old. They've been trying to sort of grow with India's demand and India's infrastructure. And what COVID has, of course, done is two main things. One is, of course, demand has accelerated for quite a few of these companies over the last 12 months. And more importantly, there's another thing which is clearly cemented from a consumer point of view, is that the consumer's acceptance of going online for a lot of things, be it utilizing fintech models or using a B2C e-commerce site or evaluating new digital consumer brands, for example, has increased tremendously. And that's something which is very clear that this is something which is going to last, not just because of COVID, it's going to be lasting for a fairly long period of time. So a lot of these business models, which probably would have taken a couple of more years before they would have thought about tapping the IPO market, are now coming in because it's not just about liquidity and valuations. It's also because of the fact that they probably now would be much closer to reaching a certain scale, both from profitability as well as top line perspective, where they would have wanted to sort of list in the public markets. So that's the sort of situation that we see. I think it's fairly exciting times from a growth perspective for a lot of these consumer tech companies.
Right. Venugopal, we are witnessing big dollops of liquidity come into some of these companies. In fact, just this week alone, we've seen 4 or 5 new unicorns take birth. What essentially they mean that it appears that big money from overseas are piling up, either adding to their positions or making new investments into Indian technology-led consumer tech plays, which you were talking about earlier. In the process, which is also happening, is that valuations are getting higher. How are you analyzing some of these companies on the valuations front, or is there a need for looking at the entire valuation process of some of these companies in a different light compared to how we have been looking at the listed space over the years?
Yeah, Jay. So I think this is a very interesting and also a tough question, which a lot of investors, especially in the public markets, would have to approach when a lot of these companies come up for listing. Now, let's look at the private market itself. You're right that the rate at which unicorns are getting created in India has tremendously increased, and I think it again boils down to the global PE and VC world also looking at the prospects of some of these end markets, some of these technology companies a bit more closely in terms of a scale-up potential. And number two is probably some part of what India did last year in terms of trying to, as a government perspective, also focusing a bit more on trying to ring fence certain areas to certain geographies and certain Indian companies also probably is another area of focus as to why sort of companies have started to look at some of these Indian tech companies. Now, but the perspective here is this, that yes, it does look like a gold rush, right? So what it means is that valuations, even the private markets, are seeing a lift. So there are two ways to approach it. If you look at the private market, I think there are a lot of mature companies in the sense of number of years of operations they've had, and probably decent track records in terms of the consumer base that they would have created, in terms of the revenue run rates that they would have created. they are the ones probably are closer to listing, let's say 12 months to 24 months away. So what is happening is that there's a rush to, for them, for these entities or private funds to sort of also participate in so-called pre-IPO rounds. This may not necessarily the public pre-IPO round, but generally pre-IPO rounds, which is where you're seeing valuation lifts of anywhere from 30 to 40%. I think when private equity invests in that nature of companies with elevated valuations, the perspective would be that look, our time horizons are no longer 8-10 years for exit, because they're pretty sure that in 1-2 years they would have exit options in these companies, and that is why you're seeing the sort of rush towards them. The second thing is, of course, is that you are seeing tons of startups, who've been there, in different areas, also getting funding. Now, this is where I think they're very small, but the point is some of them are becoming unicorns without actual revenues of businesses. Now, this is where I think Ps and VCs are taking calls on individual end markets and probably individual, founders in terms of what they have, delivered in the past. And these calls tend to be, again, high risk calls. And I think quite a few of them are still some time away, I would probably say, from listing. So those are probably the benefits that the Indian startup industry probably gets. So I think they should probably participate, in such opportunities. So let's see how many of them scale up. So it is not that all of them will. So we'll see those sort of challenges also for a few of those, as things pan out over the next 4-5 years.
Right. Venu, there are so many sub-themes which are really emerging in this overall consumer tech space. Even EVs is one of them. In fact, for Tesla, they say it's actually software on wheels. I'm not sure whether you have booked your own Tesla there in Singapore or not, but you must be using some of the consumer tech yourself. Out of all these ed tech, food tech, insure tech, energy, renewables, which are the ones you are looking particularly closely, which have major scale-up opportunities, profitability improvement, scope, etc.?
Yes, Ajay. So I think two things here, of course, important. One is scale-up potential, and number two is, of course, competitive potential. How many competitors potentially can succeed or exist in each of these areas? And of course, the third thing, is also about, how to look at valuations for such entities. So very clearly, if you look at the long list of areas in which, sort of these startups would emerge, especially in the tech sort of space, I would probably say that B2C e-commerce has a pretty large TAM potential. We're just about at a very early stages, about $35-40 billion. I think over a decade, we are expecting that to at least be $300 billion. The second thing, of course, is B2B now, which is, of course, not just Reliance, but you would see a couple of more companies participating in the retail sort of digitization opportunity. That is much larger in terms of overall GMV, but probably would be similar size or lower in terms of actual revenue opportunity. So that could be $600 billion about a decade later. So this is one area. The second area, which again is consumer linked, is food delivery. Now, food delivery has seen pretty tremendous scale up globally in terms of the revenues and GMVs for a lot of companies in a lot of geographies, and this is an area which tends to be pretty important even where I live. So this is another area where you're going to see a scale up, and more importantly, in both B2C as well as the food delivery, you have usually about 2 or 3 players who tend to be dominating, so which is good in terms of the potential for them to eventually turn profitable quickly over a 4-5 year period or a 3-year period. These are the 2 areas. The third, where I am actually excited, though I haven't really built in a very large TAM for it, is education. I think of education or edutech, which I think all of us probably in some way are using at this juncture, which may not have been the case about 24 months back, is more like IT services, where I think India has a significant role to play. You'll see a lot of B2C models globally, food delivery models globally. But when it comes to edtech, I think what India offers as an opportunity is primarily a significantly good cost model, because you could have sort of teachers and educators in a tier 2, tier 3 city as well, given fairly good bandwidths now, they could be sort of, utilizing their talent to teach students outside India. So this tends to be a fairly high margin sort of an industry if executed well, of course. So this is the third area I would be excited about. So these are the 3 main, I would see, potential for scale up. gaming, shared mobility, these are okay, but it brings its own risks in terms of individual business models. So this can't be really purely a top-down play. So one has to look at them a bit more closely. The third thing is EVs that you mentioned. It's a very starting stage, even globally. So it's not that we have a very heavy penetration for EVs, even globally. It's a very early stage in terms of how it is shaping up. But remember that when you are looking at EV, you're primarily competing to a large extent with established organized players. So you really need somebody as a disruptor to emerge, which scares everybody, which makes everybody get in. Now, this is where I think we need to see how Ola Electric, sort of when they launch their product this year, because they seem to have very ambitious plans in terms of the manufacturing scale up, and they seem to have an amazing product in terms of what we have seen, probably the best that India has to offer at this juncture, even though it's an acquired product. So it could be the starting point, perhaps, for some market share shifts in the overall industry. So remember that EV is going to be taking share from an existing industry TAM and not really growing the TAM, right? While in most of the other cases, we're basically talking about business models creating value, either on their own or taking share from unorganized.
All right, Venugopal, I'll let you go on that one. Thanks so much for your chat.